Welcome you all once again to the final edition of the management accounting, which is the performance management. Today we are going to be managers. Yes, we are managers. So call it performance management. In fact, if they want to fail many students, they can capitalize here alone. It's enough for them to fail students. If they want to pass students to here alone too, is enough for them to use to pass students. Why am I saying this? Because it have a terrible theory, a lot of theory, and with few calculation. So that we are going to focus on the calculation. With the theory aspects, normally once we have a practical experience, we can normally use that one to back up the textbook knowledge. Uh, so let's see. So first of all, list the theories that they may ask you, and we scan through using the old manual. I'll just scan through the old manual before I'll start my actual calculation. So I'll just walk you through what is likely, and then from there we now kick it from the the most important one that you cannot do away with. So let's see. Uh, so performance management system. Now, first of all, the entry part will talk about the planning, control, and decision making, the control techniques, and then the steps in planning, and then the controlling. All these ones are coming from the management accounting. Yes, the one at level one. Uh-huh. There's a bit of it there. And then we move on to management accounting information for strategic planning, because each of the planning stage or each of the type of plan, and then eight equivalent or relevant management accounting information. So if you are doing strategic planning, they need strategic information. If you are doing tactical, you need tactical information. If you are doing operational, we need operational information. So that's how they've arranged it. Then the management accounting information for management control. So planning, control, decision making, that's the item. And then the management accounting for information control. These are the theory aspects of the performance management systems. Then from there, we will move on to the actual measurement of the performance, how to measure the overall performance. That's where the calculations start from. Good. All of this from here going the theory, how to set the performance. Then when we are done, before we come and pick the actual calculation, the actual calculation. Good.
Hello, sir.
Yeah.
Process costing, is it part of level 2?
No, please. Process costing is at the level 1.
Okay.
It includes the introduction to management accounting.
Thank you very much.
When I'm done, I think I'll walk you through the syllabus again.
Okay.
The new syllabus.
That's good. Where we're supposed to concentrate.
Okay, good.
Thank you very much. It's okay.
Let me see if I can. Basically, performance management, very broad. So all what you have to do is, first of all, it talks about planning, controlling, and decision making. And then their source of information. Then You know the controlling process, right? The three, which box on to variance. You set a standard, you measure and you record the actual performance, and then finally you compare the actual result to that of the standard and see whether they are variances. So for performance management, we are just appraising the entire organization. We are just appraising the entire organization, their activity, their performance. But before we do that, there must need of planning, controlling, decision making stuff there. Then we will set the performance, we set a standard, and now we try to measure the standard. Uh-huh. Now, aside this, then we should also know sources of information because at each stage we need certain information. Good. And then all of them are provided. So if you have time, you just read about that one. It's not other plenty. Uh-huh. If time is not there too, you go straight to the calculation aspect because here you require calculation. They will ask you to do calculation. After the calculation, then you probably explain. And those ones are not difficult. Yes, those ones are not difficult. So all these ones are in there for just read. Yes, for just reading. Good. So basically, that's the starting point of the performance management system. Good. So I think all of these ones are readable. So I'll just go straight to the area. Good. Then you come to setting of objective. Yes, you have to set what objective for the organization. Objective. Two, measurement of what performance. How do we set objective? After setting up the objective, then we measure the performance using what the key performance indicators, the KPIs, key performance indicators. So let me do the performance measurement. Performance measurement. Because after setting up objective for ourselves, we need to measure the performance and see whether we've been able to achieve our stated objective. And yet there are so many tools that we can use to measure our performance, a lot of them. These are the areas that they are going to examine you. Yes, the tools that we are going to use to measure the performance. That's the management tools, it being management tools, or any other tools that will help us to measure the organization's performance. So that's the highly examinable area, and all your calculations are coming from that angle, performance measurement. First, in ACC, we have a subject, it's a subject on its own called performance management. Where is the topic? Why is the topic in ICE? It's a full subject. Imagine if it's a full subject, what it will entail. Good. So that is it. Now, how are you going to measure the performance? And even setting the objective, we use the indicators to set objectives. So we can use KPI, so key performance what indicators. And here with the key performance indicators too, we have financial and non-financial. Some of the indicators are, or they can be expressed in monetary terms, such as what profit for the year. Can we set a target or target profit of, let's say, 3 million? That's a financial indicator. In fact, for financial indicator, we can use the ratios to assess the company. So that's why last thing we were asked to compute certain ratios and use it to assess the performance of the company. Yes, so that we can measure the performance. Just that I was expecting more than the last thing's own because I was expecting both financial, both financial and non-financial. In the next time round that it will come, it will normally or they will add the non-financial aspect to it. So non-financial, because for management accounting, we provide both financial and non-financial information. So when we are setting objectives, you have to set financial objective, non-financial objective. So that when we are measuring the performance too, we will fall on the financial indicators and non-financial indicators. In fact, any item that you see in the financial statement is the financial information. Yes, from the financial reporting. So if sales revenue, it can be sales revenue, that's the target, that's the objective. We want to achieve a sales revenue of, let's say, you have to increase the sales revenue you have to increase it by 20%, or you have to achieve 5 million to be a sales revenue. That's a financial indicator. And then you can also use the ratios to assess the financial performance of the organization. So that's it. Then we have the non-financial aspects. The non-financial aspects are very important and they are topical. And then every manager need to understand the non-financial aspect because they have a link with the financial aspects. So we should take note both the financial and the non-financial. Put at the top. They are very important. What are the examples of non-financial indicators or non-financial information? So for the financial aspects, you can use the ratios such as your ROCE, target ROCE, return on capital employed, or your accounting rate of return. Good. That's a financial KPI. The financial KPI, key performance indicators. You can also use your profit. In fact, the items in the profit and loss statements and the financial position, all of them can also be used to assess the financial aspects. The non-financial indicators, non-financial, these are the items that cannot be expressed in monetary terms. Good. And here I put a strong warning here that every successful company or manager is based on the non-financial aspects. Yes, because all the financial aspects depend on the non-financial. If you want to get a profit, profit is not on its own unless you sell your product or your service before you earn money. And before you can sell, the non-financial must be there. Example is what? Product quality. Product quality. So quality of product or service. That's one. Two, customer satisfaction. So customer satisfaction. If formerly customers were not satisfied with the food, the taste. Now make sure that you improve and you measure the satisfaction and customer feedback. Customer feedback. So that's it. Customer feedback. Employee motivation, productivity, number of employees, number of customers. All of these are non-financial. Yes, and then we need to work on this before we can work on what the financial. Because if you get higher sales, it depends on the quality of your product too. and it depends on your employee morale. If you are not motivating employees, they will not put up their maximum what best for you. So always your productivity will be low. Uh-huh. So the non-financial aspects are very important. Just that some managers are rather chasing their short-term benefits by emphasizing on the financial aspect, leaving the non-financial. Yes. Why? Because their fat bonus are linked or tied to the profit. So you have to find every means of blowing the profit and then get their fat bonuses or their allowances. Forgetting that if they can work on quality, customer service, employee motivation, good working condition, this will contribute to whatever financial information that they've achieved or they have set for themselves or financial targets. Good. And here the management tool that you can use is balance scorecard. Balance scorecard. So yes, balance scorecard. It's a management model or technique tool that we use to assess. We use to set performance. We use to set performance objectives. So first of all, we use the balance scorecard to set objectives. Two, to measure the performance of the entity. So strategic management tool used to measure and appraise the company's performance and as well as setting what the objective. So yeah, you can, in fact, from here, if you want to rate balance scorecards, should be one where the organization's activities are grouped into four. Perspective, good. So that is it. Financial, it being financial, customer, everything, then innovation, then learning capabilities. All of them are there. So want to really extend your reading there. Good. So that is it.
Standard scorecard.
Yeah, balance scorecard.
Balance scorecard.
Yeah, balance scorecard.
Perspective, financial, customer, and the fourth one is success.
The fourth one is innovation, learning and innovation.
Okay.
Good. Let me see if I can bring it. So the four perspectives of the balance scorecard. They are
perspective, financial, customer, and learning and innovation.
The perspective, we have four perspectives. Good. Let me see if I can draw it here. So, or let me just name them. We have the financial. The first aspect is the financial, but it's work from the bottom. Then from the financial, you go to customer perspective. Over here, then go to internal process. Internal, and what they call it, internal process or technology. Internal processes and your technology. Good. Your technology. Then the fourth one is your learning and innovation. Wow. Learning and what? Innovation. You have to innovate. Always coming out with a new idea. Good. So we are saying that if you are setting up a target or objective, set an objective for financial. So make sure that you have a financial objective. Okay. Financial objective, you can use any of the financial indicators. Profit, you want to achieve a profit of 20 million this year, or our ROCE should not be less than 15%. Good, that's a financial target. Customer, your relationship with the customer satisfaction, feedback, internal processes, learning and innovation. Now, the author of this model stated that it worked from the bottom. And let's see how it works. It says that if you are the type that always you learn and you innovate, you improve, always you get new ideas. And when you learn, innovate, new ways of doing things, technology, new advancement, technological advancements, always you're advancing, you are going high and high and high and high. When you do that and here is cleared, or you have objective for it, if here is cleared, don't even worry, your internal processes, one, your internal processes or your production processes. Let me make it operations. Yes, I'll put operations here. Your internal processes or your operations will also be what? Easy. It will reduce the production time because you've learned and you have innovated, and then now you know new ways, faster way of producing the same product. So now your internal aspects, operations, you reduce the production time, you reduce the customer waiting time. And when the internal aspect is done well, forget it, customer will always be happy. Why? Because the customer will not come and wait for you to deliver the goods because your internal processes are efficient. No waiting time. Product quality, the best because you have innovated and you've learned. So all your internal processes are what? Efficient. You are not lacking. Now, when your customer is being satisfied, what do you think will happen? What happened to your financial, your profits?
Go up.
Exactly. So it tells you that the financial that which is on the top is not on its own. It depends on, in fact, this guy, how you are bringing new items on board to help your internal processes, and finally, to improve upon the customer satisfaction. And the customer will give you the money and then you get your financial. So that's how the balance scorecard works. So that's a basic aspect of it.
So, sir,
Yeah.
when we are explaining, we should explain from learning and innovation first.
Once you find the link, which one leads to the other, then start from the bottom because the financial is not on its own.
Okay.
The financial is not on its own. Yes. So I would say that any company who wants to survive in the future, please work on the non-financial aspects because whatever you are keen, the financial aspect that people see, it depends on like it's only a few aspects. Like the company, whatever happened between the company from January to December, only one I think 5 pages financial statement they will prepare and bring it out. Meanwhile, there are a lot which are not capitalized on the financial statement, which is the management section, the non-financial section. So that is it. Now we are still under the performance management, the indicators. So for customer, they can ask you to list the indicators under each of the perspectives. In fact, we've talked about all of them. Financial, profit, ratios, can use the ratios as indicator. Customer satisfaction, customer feedback, customer loyalty. Good. Internal process, fast way of doing things, improvement. You have reduced the production time. Then learning and innovation, technological advancements, new ideas. All of them will be as what in between. So yeah, let me go straight forward and give you what you should focus on. One, we have talked about the key performance indicators, both financial and non-financial. Two, the ratios, where three, measuring the divisional performance, measuring of divisional performance or units. So measuring of divisional performance, we are going to use what we call return on investment or the residual income. Yeah. Good. Last one, is a transfer pricing. Transfer pricing.
Pricing.
Good. Which have not been coming though. The last time that it came was that's November 2018. It was a theory. It was a theory, November 2018 theory for 5 marks. That's the last time the transfer pricing appeared. Good. Now, the most important one is this. So I'll give you two. Last thing, because they brought the ratios. Because they brought the ratio this time around, though, we're not going to repeat it again. Because a lot of people go and learn. So they have to dodge it. So you go and see return on investment or residual income over there. Yes. If not, then they may fall on the transfer pricing. I just that they stop asking. No. Transfer pricing has been scrapped off from a new syllabus. Good. But it's in the manual. So take note. Well, we'll go through the new syllabus. It's in the manual. It's still in the manual. Why? Because they'll give you 10 marks. If there's theory, probably making 15 marks. But whichever be the case, there will be calculation and there will be some bit of what? Commentary. There will be some bit of commentary. Good. So that is it. So I'll start. Measurement of divisional performance. Normally, this one occurs or is sweet when the companies have a lot of divisions or have more than one division. Like they have 2, 3 going. So if you want to measure each of the division, or we will call it branch, segment, location, if you want to measure the performance of each of the division, which measurement basis, which measurement indicators are you going to use to appraise each of the division? The best one to use is the return on investment, return on their investment, that division's investment, and their residual income, how much you've invested and how much you are getting from there as net return. And then you can also use transfer pricing to appraise them. So that is it. So now let's start with the residual income. And then we are done. So I'll start with the return on investment. Return on investment. Return on investment. So calculation of return on investment. It's a formula work. Then you get it. It's not difficult. It's a bit straightforward. For the past, all the questions they've asked on this, they are a bit straightforward. No hunchos. No difficult section. Yes, that one I can testify. Except for the theory that they brought in November 2017 to cause trouble. In November 2017, there was no calculation under the performance management. You can imagine. And they brought the level 1 information system, transaction management information system. The first aspect of the performance management that we saw. That's what they loaded it in that ES paper. I'll show you. I'll walk you through all the questions which has dropped over the period. You will see, including last things on. Okay. Good. So let's see the formula. Return. Return on investment simple means profit. It's a profit. It's a return over the investment. So it's a profit before interest and tax, but it should be after depreciation. Yes. It's a profit before interest and tax, but it must be after depreciation. In fact, it must be after depreciation. It must be after depreciation. Good. All divided by the capital employed. Capital employed. Good. Capital employed. Good. And capital employed can also be the net assets. The net assets. The net asset. It's also equal to the net assets. You don't need to worry too much because most of it will give it to you, except for if we give you financial statement, we just give you the company's financial statement extract. Very simple one. Few issues, and we ask you to calculate it for us. We'll go through some of them. So that is it, times 100. So let me see. So I'll pick my first illustration. My first illustration. And it must be a past question. It must be a past question. Yes, now they're just going straight to the exams room straight. Let me see. I'll pick most recent one. All what you need to do is you have to know how to calculate for the profit before interest and tax. My only worry is this. They will give you some items and then you have to massage it to get a profit what you want. So if they've not given you what you want, all what I have to do is that convert what they have given you to suit what you want. Okay, so that is it. Okay, I'll come to this question. I'm looking for yeah, interesting. Oh, that's the end of the page. Oh. Okay, there's 1 year. I think there's 1 year that I like that year very well. That year I like it very well. Okay, I'll go to the past question. Okay, let's do this one. Question 14. Super Express Transport Company runs a fleet of buses on Accra to Sunyani routes, which is considered as what? As a business unit. Good. So like we said, to measure divisional performance, different units. Here it's only one. But some question will give you 2 units, 3 in that order. The following is an extract from the final account of the company at the last operating year. Stocks of buses on that route at cost less depreciation. And then the net operating profit is this. One of the bus bought 3 years ago at the cost of this. Good. Now let me go to the board and then do some few illustration here. Now this capital employed, if you follow ratio, there are 2 formulas. Either it's equal to the net asset. That's the net total asset, which is calculated by your total asset less your current liability. Good. That's one way of getting it. 2, it's equal to your equity plus what? Long-term, non-current liability. The capital employed, these are the 2 formulas. All of them give out the same answer. So anytime they don't give the capital employed, just fall on this and you are done. But most exam questions will give it to you, like this one. Good. Now let's continue. Yes.
I want to write the equity one.
Okay. Equity plus non-current liability.
Okay.
Good. And profit before interest and tax, but it should be after depreciation. Good. It should be after depreciation. Now let's see. The following is an extract from the final account of the company as the last operating year. Stock of buses on that route at a cost less depreciation is worth 660, and then the asset too must be depreciated. And then the net operating profit is 198,000. Net operating profit, good. If you don't bring issues of tax and depreciation, once they say net, since the depreciation has been subtracted, agreed. Good.
Yeah.
One of the buses bought 3 years ago at a cost of 150,000 was not performing efficiently because it got involved in an accident just a year after it was purchased. Just a year after it was purchased. Good. Although the damage was minor, the operations manager suggested that the bus must be scrapped in spite of the fact that it earned a profit of 6,000 in the year, and depreciation is at the rate of 20% per annum. Now, anytime, good, on straight line basis. Now, in the exam question, we will ask you. Let me just introduce the exam question straightforward. When I do that, that means that's either we'll ask you to calculate the return on investment before and after. So before and what? After. After something. After can be that you are going to buy a new machine. So calculate the return on investment before the machine comes and after the machine. After can also mean they are going to sell. So calculate it before and after. So if they are going to sell, it means that you have to subtract. Take all the details from the existence so that you can get what? The details after the sale. If they are going to buy, then after you add the details of the new one to the existing one to get the total and you calculate the return again, you are done. And this has been the exam trend. So that is it. So this, how do you calculate before and after? And I'm sure that that's the question they will ask. Before and after. Good. So let's see the requirement. Evaluate the effect of this proposal on the performance of the business unit if return on investment is used to measure performance of sub-units. So we just put our formula down and we just calculate before and after and we find their position. If they sell the bus, what will happen to the return on investment? After the sale, will it increase or decrease? Then we just advise. I hope you get it.
Yes.
So that's how the question will be. Always, they'll give you something. They want to do something after and before. So they will ask you to render advice to them whether they should do it or not. So let's calculate we've got the formula here. Oh, sorry, let's go to the board. So first, don't forget to code the formula. And write before the sale. So before the sale, the profit is 198,000, right?
Yes.
Okay, good. And then the capital employed is what? That's the net assets.
Yes. 198.
No, 660,000.
660.
Good. So 660,000 times what? 100%.
Times 100.
Good. So this is the divisional return on investment at the end or before they sell. Where's my calculator? All right, let me bring a calculator. Yeah. Wow. Okay. This just how to left my. Wow. I don't see it. I don't see that. Might be around. Please, what do you get?
We have 33%.
Good. So 30.
30%.
Okay.
I don't know.
Okay,
Oh,
so let me see.
it's 30%.
Okay, so 30%. So this is before. Now let's see after. What will happen? After, if they are going to sell, take all the details of the disposed asset or the disposed unit from this and get the remaining and so calculate it again. So after, we're told that the profit of the bus which involved in accident is 6,000 per year. Everything must be per year. If they give you per month, convert it to year because this percentage must be quoted per annum. If everything is monthly on monthly basis, you can also calculate it on monthly basis. But sometimes we will give you the information and we ask you to annualize it. I have a question like that. Annualize. Good. Annualize it. So here to be 198
plus 6,000.
Okay. After.
Yes.
That's minus.
Good. After. They are going to sell.
Okay.
So when they sell, they won't get that profit.
They will not get that profit. Okay.
Good.
Okay.
So all divided by the 660,000 like this, less what? The carrying amount of the disposed assets so that they can get the remaining. So let's go and calculate the carrying amount of the disposed assets. So let's go and pick the information. Now, they bought an asset. One of the bus bought 3 years ago. They bought it 3 years ago. And it was performing efficiently because it wasn't performing efficiently because it got involved in an accident just a year after it was purchased. So now calculate the carrying amount for me. If depreciation is at the rate of what? 20%, the cost of the asset is 150, which was purchased 3 years ago. So how do you find the carrying amount? That's the workings that we will go and do. Let me go down small. Good. So we go and then prepare the workings. So let me do the working somewhere here. Carrying amount of the asset. How do you find carrying amount?
We divide the cost of the asset by 20%. And because the asset has traveled for 3 years, multiply by 3, we have 90 less than 150. That's 60. So we have to take the.
That's 60. And you show workings how you got the 60.
So now, do you have to show workings about the 62?
Exactly, you have to show the workings because this 60 is not in the question. Any figure that you arrive, any figure, this one is in the question, so that one you don't need to tell us. But this 60 is not in the question. So you show a working how you got. Either you can do it here if it not confuse you. But I think if it will confuse you, come and do it here. So when you say the cost of the asset is 150,000 accumulated depreciation, which is the 150 by 20% times 3, right?
Times 3, yes.
So 20% times 150 times 3.
Yes.
So we'll give her 90, right? Or 9,000.
90, yes. 90.
Okay, so you get 60.
Yeah.
Good. So the remaining asset, we take it off. So that the remaining asset is 600, right?
Yes.
Alternative to get this 60. 20% means the asset will travel for 5 years, eh?
Yes.
Okay, so it has traveled how many years so far?
3 years.
11 how many years?
2 years.
Okay, so it will be 2/5 times the 150 to give you the carrying amount. Straightforward, you don't need to worry yourself. So if you do this, it will also give you the answer straightforward. 60 to give you the carrying amount, that one yourself. How do you get it?
Yes.
The remaining years, which is 2, by the entire, because you're looking for the current value or the remaining value, which is the remaining years over the entire value times the entire value. How do you get it?
Yeah.
The same way that I can also find accumulated depreciation by saying 3/5 times 150. Also give you the accumulated depreciation. Okay, so now this times 100. That's the answer.
Yeah.
Then we compare whether it's
Yeah.
viable to sell. Because sometimes, even though it is not producing money, it is it's absorbing some of the fixed costs for you. So if you dispose it off, the fixed costs will fall on the remaining asset, which may be a danger. So you have to perform calculation and see. So what's the answer?
32%.
32%.
Good. So what are you going to tell management? I like that. This is the one I was saying.
They have to
Mm-hmm.
sell
Eh,
the asset that had the accident,
why?
because when they sell it, their profit level will go up. The ratio,
Exactly.
the return
Exactly.
on investment will go up.
Exactly. Because when they sell the asset, after they sell, their return on investment will be what? Increased. It,
Increase.
it means that that guy wasn't producing enough profit. That asset, that one bus wasn't producing much better results because of the accident. So they should dispose it off. Then you are done. So that's the what's the name? The return on capital employed. So that is it. I will talk about something small about the residual income. I'll give you the formula, then I'll pick one question, one full question that have both residual income and then the return on investment, and then we will discuss the advantages and disadvantages. From
Yeah,
there, then I'll just walk you through the questions, how they will ask
no
you.
problem.
Uh-huh. I think I'll go back to the manual. The old manual have one nice question that I normally use it. So I normally use that question well because that question is very good. Where is it called? Performance, divisional performance, divisional performance, divisional performance. That question is very good. Good. So yes, the balance scorecard is here. They are also talking about building block model. Okay, there's another model today for us. Good. So ratios, as they've been asked in financial reporting, can also be asked here. But I'll be surprised if it repeat again. That one I'll be surprised because it came last sitting. Uh-huh. Just last sitting. So all the ratios that we calculated under financial reporting, they're also available. Yes, especially working capital management. But my interest is on the non-financial performance. So when we are reading, you should read on the non-financial performance, because out of the 6 papers at level 2, one of them it will appear. Yes, to appear one of them, and management accounting is the key one, because in 2017 November we were timing it in management accounting. They went, where Dodge? Oh, this examiners, what happened? They rather asked in financial management. It appeared in financial management and financial reporting that year. It appeared in financial management and financial reporting, where Dodge management accounting. And instead, I'll show you the question that they brought that year. I will go through all the questions to end the game. Let me go to my question. The return on investment and the residual income. So I will give you the formula for the residual income. Good. Divisional performance and transfer pricing, the twins. So divisionalism and all those. These responsibility centers, cost center, revenue center, profit center. This they can do their thing again, no, because
Is it
if
part of level 1?
no, it's level 2.
Okay.
Responsibility accounting. It's part of level 1. And whatever is part of level 1 is in level 2, they like examining to level 2. Like what happened last season. In fact, last season they brought some 5 marker question from the level 1. 5 from level 1. It wasn't in the level 2. So Good. So I will. Oh, this one they've already calculated it. No discussion. Discussion. No discussion. Ah. Discussion. I think. Wow. Good. No discussion. Okay. Let me give you the formula for the ROI so that we will now combine all of them together. Now ROI or residual income. That one too, you can have before and after. Residual income is nothing by, as the name suggests, residual. RI. Residual income. It's nothing but the profit that we use. This profit, where are you? This profit now. The same profit now. So the profit less what? The finance cost. Or we call it interest. Or finance cost. Or interest on the capital employed. Because if we assume that if you secure loan or any other finance to set up that division, it may be possible that you'll be paying interest though. Yes, you may pay interest because the amount might not be free. Okay. So the interest that I am paying, they will charge it on the amount they've given me. And that's the same amount I've used to go and buy the assets. So I'm just assuming that the finance cost, or they'll give what you call cost of capital in a question. They will give you, in fact, or better, so they'll give you a percentage. Then put it right way. Percentage. When you see that percentage there, it's for the residual income. So the cost of capital, I'm just assuming here is 10%. Calculate the residual income, both after and before, or before and after. So the profit, I'll pick the profit. They had 198,000. Less what? The finance cost. How do you calculate the finance cost? Quickly. Open your bracket. Say 10% times the value of the capital employed. That's all. So times 660. Good. And now give us 198,000 less 66,000. Agreed.
Yes.
So if my calculator or my memory is setting me correct, then I'll get 132,000 to be the residual income. Agreed. If their finance cost is 10% or their cost of capital is 10%. Good. That's the before. What about after? After on the 8 calculation will be somewhere, we let the 6,000 first and get 192. So be 192,000 less, and this one to be less this one first. We get 600 times 10%. That will give us 60. So 60,000. So what do you get? 132,000, right? How do we get it?
Yes.
Good. So it means that both after and before, when we use it, it will give us the same answer. So that's why the examiner asks us to use the return on investment, because residual income will not help us to make a decision. It would let us lie that it does not have any impact. Yes, because there's no impact here. So let us come out with the advantage and disadvantage. So that's all for the residual income. In fact, actually, I'm done with the return on investment. All what you have to do is now start solving questions on it. And this one, dear, I'm highly sure and certain that you get question on this calculation. So I'll take my time from now up to 9:30. I'll take my time and walk you through all the questions one after the other and how we should solve it. So first of all, I'll go through the manual to finish it in the manual first before I start the questions, starting from the past question and how they've been asking it and how to go by it. Good.
Sir.
Yeah.
You say you want us to go through the advantages and the disadvantages.
Yes. Of each of them.
Okay.
Of each of them. Because so, right now, you realize that the residual income might not be applicable When
Yeah,
over here,
give the same value.
give the same value. So it might not be applicable. So that is it. So we are jotting the disadvantages and the advantages down.
Yeah.
So let's go to the manual. We will scan through some questions, especially the return on investment. It have a big challenge. The challenge is that I think there was a question that we used to illustrate. We use this one to illustrate the challenge. This example, we're going to use this one to illustrate the challenge of return on investment.
Okay.
Return on investment. Good. Now, the advantage of the return on investment is, but it's also called the accounting rate of return, or the ROCE. It is the ROCE, the return on the capital employed. If it's a single unit, you compare this one to that of the target ROCE. But if there are two or more units, you choose the one with the highest one. And it's the ROCE, return on capital employed. It's the same as what? The return on investment, or the accounting rate. Just the accounting rate have its own approach. Accounting rate. Okay. Now there's one challenge with the return on investment. The challenge on the return on investment is that as the asset is aging, the return on investment becomes higher, deceiving us that we are getting more return, forgetting that when the asset become old, or when we are depreciating the asset, it reduces the value, right?
Yeah.
If the down one reduces and the top one is still the same, automatically to increase the rate, right?
Yes.
And then when the rate increases, we'll be happy. Oh, they are doing well. Meanwhile, it's a lie.
The company is doing well.
Good. Meanwhile, that division is doing well. Meanwhile, it's a lie. It's because the asset is got aging, going down, which has contributed that. That's the major challenge of residual, the return on
capital employed.
Yes, or the return on investment.
Okay.
Good. That is it. Where the residual income does not depict that. Residual income does not depict that, but just that its one is minimal. Then this one, it does not show absolute return. It just tells you what? A mere percentage. However, residual income show you or determine absolute return. Absolute. You are getting this as return. Basically, that's the advantage and disadvantage. Now let's check this question. The question I have there. Now, when the non-current asset, the first time they bought it, that's year 0. 1 year after, the depreciation rate is 20. So the carrying amount become 90 or 80.
It become 80.
80. Good. Yeah. Plus they add a working capital to it.
So it's 90.
So they had the 80 here. They had a profit of 10,000. Okay, the first year, where are you? Yeah, profit of 10,000. Good. When I get a profit of 10,000, so the capital employed will be, now, when they give you the net assets, the non-current assets plus working capital will give us the net assets, which is the same as the total asset less the current liability.
Yeah.
Good. So in exam, you may likely they'll give you the non-current assets. When they give you non-current assets, they'll give you working capital, and just have to add. It will give you what? The total capital employed. Good. So that is it. Now, when the asset at age 1, the return on investment is what?
10%.
Good. At age 2, it's 12.5%. So as the asset is aging, is increasing. Look at the year 5.
50%.
50%. As if they are doing well. Meanwhile, is profit has not changed. Profit is still 10, 10, 10, 10, 10.
10, 10, 10, 10, 10.
Your profit is still the same, but why is your residual or return on investment keep on increasing? Is because as the assets are
It's
aging,
aging. Okay.
as the assets are aging and they are not be replacing it, the value becomes smaller, and then it deceives. It gives an impression of what? Of false improvement. Gives an impression of false improvement. That's the notable issue with that of return on investment. So that is it. Okay, so here to be 100, less the depreciation of what? 80 plus 10. Yes, plus 10, making 90. Good, so it should be 90. Yes, 100. 100 minus 20. That will give us 80. Okay, we are looking for the carrying amount. Good. So the carrying amount cumulatively here will be 100. 100 minus 40. That will give us 60. Good. 60 plus the working capital. That will give us 10, making 70. Good. In that order. Okay. So that is it. Okay, now let's see. Calculate the company's return on investment in 2 years' time. A new company has non-current asset of 460, which will be depreciated to nil on straight line basis over 10 years. Net current asset, that's working capital, is consistently at 75. The annual profit will consistently be 30,000. What is the ROI? ROI is measured as return on net assets. Good. So in year 2, what will be the carrying amount of the assets? You can use the shortcut approach for me. Okay.
Okay.
You can use the shortcut approach because where there's no residual value, 460. So in year 2, what will be the remaining years? 8 years, right?
Yes.
So quickly, the carrying amount will be 8 over 10, right? Times the 460. Agreed.
Yeah.
Or we should go by the normal approach. Let me see if I can summarize the question here. Good. Now the question, if I should summarize it, the asset is 460. That's the cost of the assets, 460,000. And then the net working capital, net current asset, which is also called working capital, another name for it, which is 75,000. And it will be used for 10 years. For 10 years. It is for 10 years. It will be used for 10 years. Good. Then what do we do? We said that the profit, it will produce a constant annual profit of 30,000 per year. Good. So calculate the ROI for year 2 and 6. So let's see. Profit has been given. This profit, is it after tax or before tax? So is it after depreciation or before depreciation? Annual profit will be 30,000. Okay, so will it be? Then you just find it and then divide it by it.
So they just set annual profit.
Oh, okay. Okay, so we can just pick it and then.
Yeah, and there's no tax too, so.
Oh, okay. No, is it after depreciation or before depreciation?
Before depreciation.
Okay, let's assume that once if no child depreciation. Okay, good. So depreciation for a year will be it's after depreciation. The profit after depreciation. Agreed. Yeah,
Yes.
it's after depreciation, so that is it. Okay, so how do you get it? You have to get a carrying amount. So for year 2, the profit will be, so year 2, the ROI will nothing be, the profit is still 30,000,
Yeah.
all divided by the carrying amount at the end of year 2 plus the working capital. Good, plus the working capital. So the current amount of the asset at the end of year 2 will be, just let us use the shortcut.
368.
Good, times 460. So to be 368 plus,
75.
good, so plus 75,000 times 100, and that will give us
That's about 6
6
6.7%.
6.8.
6.8.
Okay, so
But
6.8%.
it's 68.
Is 68.
Oh, sorry, 6.8.
No,
6.8 is correct.
Good. 6.8. What about this year 2? So if you are going to do year 6 here, the same profit, 30,000 divided
Yeah.
current amount. Now 11. At the end of the year 6, how many years left? 4 years. So just create
4
this one,
years.
make it 4 to give you the current amount plus 75,000. You are done. And then you put it down. So that's the calculation.
$11.6.
Good. 11.6. Then you are done. So 11.6. Have you seen that this one to it has also reflected here? As the asset is aging, profit is still the same, but still
Yeah.
it's increasing,
Yeah.
showing that they've done well, right?
Yes.
For a natural sense, profit is still the same. They've not done anything. They've not increased the
Yes.
profits. So
Yes.
that's one bad sign about it. Now let's move on to the ROI. Let's see if we can get something nice about ROI. So ROI, why? No, okay. So they had 6.8 and 11.6. Good. The residual income. Good. Residual income. So imputed interest or the notional interest. Good. And please, the profit, it must be after or depreciation. It's very important.
Depreciation. Yeah.
I'm here to see examiner that will give us profit, which is not
After
after.
depreciation.
And you have to take it off. So we should take notes. They can do that. Because once the original formula states that it must be after depreciation, they can massage it for you. Okay, so what are the residual income before and after investment? Is here too. So let's see how you can calculate it. They said a division. Hope you can see that.
Yeah.
A division with a capital employed of 400,000 currently earns ROI of 22%. It can make an additional investment of 50 for 5-year life with a nil residual value. The average net profit from this investment will be 12,000 after depreciation. The division's cost of capital is 14%. What is the residual incomes before and after? So how do you calculate? So calculate the after and before for me, and let's see before and after. So let's go to the board and see how you can screenshot this page because I'll take the board off. Okay, I'll take the screen off. Good. So let's see. In fact, this one is one of the interested areas. So before, what they give it to, just write it before here. After, residual income is nothing by the profit, right?
Yes.
Less the finance cost or
Finance
imputed
cost
cost.
or notional
Cost,
interest.
like the notional interest or imputed interest, whatever be the case, we are
Yeah.
finding it's on the capital employed.
Capital employed.
So that is it. So imputed costs. Good. After this question, walk through the exam questions and then to be the and let's go and pick the items here. Sorry, let's go and pick the items here. Good. Division with a capital employed of 400 currently earns return on investment of 22%. What does it mean? If the return on investment is 22, so what will be the profit? Have you seen? So we have to find the current profit. So the current profit will be 22% of the 400,000, right?
Yeah.
Because how do you find the return on the investment? It's equal to the profit divided by what? The capital employed. Now they've given us that the ROI is 22%. This one is the 400. We don't know the profit. Have you seen?
Yeah.
So for current one, we can make this guy the subject. So the profit for current one will be 400 times 22%. Good. Let's raise 3 zeros here. If it's in thousands. But if you have no raise, you can just make it 4. That will give us 88, right?
Yes.
Good. Then what about after? Let's see. If the current profit is 88, it can make an additional investment of 50 for 5-year life with a net residual value. The average net profit, net means is after depreciation,
Yes.
from the investment will be 12,000. They say after depreciation. They've confirmed it too. It's 12,000. Good. So let's go. So it means that after the investment, here are you going to add? Here is investment, not disposal. So you have to check. Here they are buying new investment. When they buy, what happened to the profit? Will it increase or to go down?
When
Okay,
they buy a new investment,
yes, with the profit.
It should go up.
Yeah, to go up because they are adding up. The new investment is giving us a profit of 12,000.
okay.
So in simplest step, when you go to the question and they say that they are going to buy or they are going to invest, just add the details of the new one. If you
Okay.
go and they say they are going to sell or they are going to dispose of, put up some of their investment, just subtract. That's all.
Subtract. Okay.
Because all the details must be eliminated. So here the new ones is bringing us 12 million or 12,000. So the second one will be the 88 plus 12, right? And that will
Yes.
probably give us 100. Agreed.
Yeah.
Then let's go to the imputed cost. Imputed cost or the notional cost. Into bracket, what's their cost of capital or the finance cost? 14%, right?
Yeah.
Good, 14%. So meanwhile, the cost of the machine that they are taking off is 50. Good. So over here, it will be 14% of the 400. That will give us 14% of 400. And that will give us, so that we go and calculate for that of after. After we have to add. Good. After we have to add. So after we are going to add. Okay, so after we are going to add. So the after, I hope this figure will change, right? The 400 will increase because the new investment, its own is 50. So add the cost of the investment to the existing capital employed. So you get 14% times 450 agreed. Because
Yeah.
the new investment, the cost will be 50. So this one will give us, so the first one will give us 14% on 400. And then that's the end of the tuition fees. What level is the question that we are going to look at? Okay, so please, what do you get? The first one, that's
56.
56. Good. And then the second one will give us, should be more than 56. This one, half, 7. So 63 or so.
Second is 63.
Good, 63. So you take it off and then get the residual. So residual income. That will give us it'll give us 2 and then 3. 32. It'll give us 7.
37.
Good. So you should they invest or they should not invest?
They should invest.
Good, because after us, the residual income is be higher. So that is it, and you are done. Uh-huh. So basically, that is the end of the game. Let me
Performance management.
Yes, performance management. How to measure the divisional performance. Now, what level is to walk you through the questions.
So,
Then we have,
sir,
yeah,
can you just talk briefly about the non-financial briefly?
the non-financial deals with the qualities. That's the aspect that it depends on its own, where the financial most of the financial items depend on the non-financial. They include your customer service, the quality, the employee morale, good working conditions, number of customers, number of employees. All these ones are factored in the non-financial.
Okay.
Yes, that their indicators. Their indicators are a bit difficult because you're not able to express them in financial terms. Not that they are difficult. Most managers don't emphasize on it. They don't seem to be important. But please, that one is important. It's really more better than the financial because the financial depend on the non-financial. Uh-huh. And you can use the balance scorecard. The balance scorecard is a very good example to do this. Uh-huh. So the non-financial, you set targets. This time, my customer should be say this. My quality of products should be improved. My waiting time, I have to learn so that when I'm producing, I don't spend my time so that you reduce the customer waiting time and then you are done. Okay, so advantages, weakness of residual income compared with ROI. All of them are here. Residual income will increase when the investment and above cost of capital. Here is it, all of them. But this one we can
Screenshot.
Exactly. So you can screenshot this session. I'll try and see if I can forward the whole material to you to just this aspect, and then you are done. Okay. So this one too is there. I think you're done. Now let me go to the questions. The exam questions. The exam questions. Okay, what am I even showing? Let me see. The exam question. I'll start from the compiled question. This question. I'll start from here. I'll start from this question before I move on to the exam. I'm looking for my questions. So looking for my questions. Some question B that I have. Okay, it was in that mock. It was in that mock. Okay, so let's see this question. This one's very, very old. As you can even see that from the look. Have you seen it?
Yeah.
Wahab.
Yes.
Wahab Ventures. Good. Wahab Ventures has been in business for over 10 solid years. Wow. The company's assets and profits at the end of December 2009 were as follows. Fixed asset, that's a non-current asset. Book value, that's a carrying amount. Net book value is 300. Net current asset, that's working capital. Another name, net current asset. This is 40, so making 340. Net profit before tax, 64. The fixed asset consists of 5 separate items. Each cost 60, which are 60,000, which are depreciated to 0 over 5 years on straight line basis. Okay. For each of the past years, on December 31st December, it had bought a replacement for the asset that had just been withdrawn, and it's proposed to continue this policy. The asset manufacturer has been able to keep his prices constant over the time because of technological advancement. The directors of the company believe that there will be no change in data presented above. However, the following opportunities are available. All these ones. Don't you know all these ones? So all these ones, you don't need them. The most important one are I and I. An investment consists of 60,000, which will yield an annual profit of 10. Number 2, an asset that currently earns 3,900 annually would be sold at the price which is equal to their written down value of 24,000. How we get it?
Yeah.
So the question is, calculate the ROCE, return on capital employed, which is same as return on investment. And then the residual income, if the company's cost of capital is estimated to be 15%. How we get it?
Yeah.
How we get it?
Yes.
If the investment was undertaken, so here is what after. If the new, so calculate the new. I wish they said new.
Yeah.
And this question was repeated recently. When we go to the past question, you see it. This is a past question. Very old. Good. So how do you calculate the new ROCE if the investment was what undertaken? Okay, so if they are going to take the investment, then you add the investment cost to the current capital employed, right?
Yeah.
So the capital employed of the 340 will increase by 60 to 400, right?
Yes.
And just add this profit because you are investing, you add everything, you add a profit to the current profit of 64, making 74. You are done.
Yeah.
And that's the answer for 3 marks. So, and the residual income, Down to the same thing. You find the new capital employed, which will be 400. And then the new profit, 74. And you find 10%, 15% of 400. 15% of 400 is around 60 or so. Yes, which is 60 or 6,000. Then you take it off from the 74 and you are done. And then the second one said that calculate the new ROCE if the asset was sold. So now you are going to pick the details of the disposed asset.
Yeah.
Currently earn 3,900 annually. You subtract, and then the book value is 24. Down to you subtract, and you are done.
So say,
yeah,
the book value, they've already worked on depreciation in arrive at
yes,
24,000.
exactly. When they say
Okay.
good, yeah, it's true. So they said something here. Written down book value 24. The same as what net book value or carrying amount. So they've already worked it out.
Okay.
Good. Now the C says state whether the reasons state with reasons whether you would recommend that the investment be undertaken or the asset should be what sold. So you compare which one, like give them the best option you choose for them. For 4 marks though, with reasons. Identify and explain some reasons for decentralization. This one is called for divisionalism because division comes for that section. Then you are done. So that's my first question. Second question, explain the meaning of each of the underlisted measures which may be used for divisional performance management and discuss the advantages and the problems associated with the use of each. 10 marks. I like that. This one is a recent question. Dromo Limited is the divisional company. It has 2 divisions called Na and Hewo. Nan's operations include milling and then dealings in grain market. Okay. Hewo operates a number of what? Bakeries. The following data relate to the year ended October 2009. Sales, they are there. Now, when they give you a financial statement or P&L, when you see P&L there, it means that they want you to calculate what you call controllable profits and non-controllable. Please, the profit that we want, it must be controllable. What do you mean by controllable? Some of the expenses, the division cannot control it. Those ones must be rejected when calculating the profit. We have to pick the profit that the division can control. So let me give you a typical example. If you are going to measure some manager and you use something that does not fall within its control to appraise him, I mean, it's very painful. Something that you cannot do anything about, but they use that one to appraise you. So example include, that's why we pick the profit before interest and tax. Profit before tax or before interest and tax. Because tax is what? It's not management or the division cannot control, because sometimes the tax is centralized. Interest, division cannot control the interest. So that's why we pick profit before interest and tax. Good. Now, anytime there's apportionment of head office expenses, it must be rejected because it is what? Uncontrollable. Because that division cannot control it. If they are sharing the head office cost and you apportion it for them, that division cannot control it. Good. So we should take notes. Okay. Now let's continue our game. So sales, gain on sale of plant, dash here, we have some figure. Direct material, controllable. Labor, controllable. Divisional overheads, controllable. Depreciation, controllable. Head office cost allocated, is it controllable?
No.
No.
Good. So that figure must be eliminated in calculating the profit because you cannot use that one to what? Build them. That one is coming from it has been centralized, not decentralized. It has been centralized. It's coming from the central office. We cannot control how much they should charge us as admin expenses. No. So they cannot use that one to appraise us. So we have to take it off. When you see a question like that, that's what examiner want to examine. So here I'm very sure that they will ask us about it. Now let's go to the financial position. Very few. Fixed asset, cost less accumulated depreciation. They've stated that this is the carrying amount. Stocks, trade receivable. Why are they giving us this information? Why are they giving us this information? These ones. The current asset. And then the current liability, bank overdraft.
So that we can get the capital.
Right.
Good. The capital employed. Perfect. Because you know that the capital employed is equal to the non-current asset plus the current asset less the current liability. This and this give us what you call the capital employed. This one is that's the net current asset. Finally, add it to this and get net assets. Good. So when they give you the breakdown, that means the examiner want to test you there. Now let's see. So basically, you add all the assets and less all the current liability, you are done. We also said that net asset is equal to total asset less the current liability. Good. Now let's see this. Divisional manager, DMs, are given authority to spend up to 25,000 on capital items as long as total spending remains within the amount provided for the small project in the annual budget. Larger projects as well as sales and assets with book values in excess of 25,000 must be submitted to the central management. Decision has been made that the divisional managers' performance should be appraised on basis of controllable profit. I like that. Controllable profit. This measure will exclude depreciation and gains or losses of sale of assets, treating investment in fixed asset as what? As central management responsibility. The cost of capital for Dromo is 20% per annum. Calculate for both the following three measures. 1, return on capital employed. 2, residual income. 3, controllable profit. So control profit. Good. So return on capital employed, the normal one that we know. Just picking it direct. Just picking it direct and then you are done. And then the residual income too. When you get your capital employed, you just take the 20% from it. You take 20% and take it from the profit. Controllable profits, you don't need to include the items that fall outside the control. So they have listed some of them here. That this measure would exclude depreciation and gain or losses on sale of what? The assets. Of assets. And then you are done. That is going for 10 marks. Now question 7. Discuss 3 methods that can be used to fix transfer price. No, I won't talk about transfer price. Good. The following, I'm on question 7B. Global MX has 2 divisions located in what? Tema and what? Kumasi. All of them are there. Profit before depreciation. Have you seen what this examiner want to do?
Yes.
Profit before depreciation. Depreciation is here. Oh, they've not done anything. We have to subtract. I thought they will not even, they will ask her to go and calculate it. Non-current asset, they are there. Current asset, they are there. Current liability, they are there. Company's cost of capital. Have you seen? This one's a bit straight.
Hello, sir.
Yeah, I'm here.
Assuming they've not given that depreciation.
Then they'll give you the rate of calculating depreciation. The method.
Assuming they give us rate 10%.
Okay, so you just find 10% of 450. That'll give us 45.
That is, but the 450 is the profit,
cost.
no?
Hey, sorry.
It's the cost.
The cost, the non-current asset here is 1,200. This figure. You calculate on this figure.
Okay, so we drop it on this figure, which is 120.
Good, 120.
And we take the 120 from the 450.
Exactly. In fact, it is 10%. They use 10%.
It's 10%. It's 10% here. Yes.
Yes.
It's 10%.
120 and 130. 10%.
Yeah, it's 10%. Yes, 10%. As if I know. Yeah.
Exactly. So 10 years.
Okay.
In that order. And you find it and you are done.
Okay.
So both return and comment on the performance. You are done. Now the B part. Look, check the B part. These examiners like it most often. The Kumasi branch intend to sell one of the non-current assets with a book value of what? 120 and make a profit of 60. That's Kumasi. Tema also want to acquire. That's investment. One division want to buy, other one want to sell. So Tema also want to acquire another asset costing 90. That will generate a profit of 40,000. To what extent will the decisions after the performance? To what extent will the decision affect the performance of the division? Okay. So we are just asking for before and after.
It's not here. Tomorrow.
I'll go and bring it.
I don't know where they've put it.
Good. So you're looking for before and then after. Okay.
So listen.
I'm on my first question.
Okay.
Going through my first question. Now there's an issue here. They said that the Kumasi branch intend to sell one of the non-current assets with a book value of 120. That make a profit of 60. Tema also want to acquire another asset costing 90,000. That will generate a profit of what? 40,000. To what extent will the decisions affect the performance of the division? We are just asking you to calculate before and after. That's all.
How are we going to calculate it separately or we add it?
No, separately because the items, the profit are different. So Tema is selling and Kumasi is buying. So for Tema, what do? You add and then
you subtract.
Exactly. Then you are done. Good. So perfectly good. Now, Martha, this one is transfer pricing. I'm good there. This one too. A name shoes is for 2016 or 2017. That one's also transfer pricing. Okay, this question. Why do I bring this question here? Explain the following terminologies. The one that you asked that. Good. Have you seen this question?
Yeah.
This is a question that came last city for 5 marks. The one I've highlighted on it.
Yeah.
Yes, it came for 5 marks.
Explain 3 qualities of management accounting
information. They make it 5. And it's for level 1.
Okay.
B. Explain briefly the terminology: cost center, revenue center, profit center, investment center. I hope they are okay. Fine, let me just use something like this. Cost center is the place where they accumulate your cost. So cost center. And then revenue center, where they generate revenue. Profit. The profit managers take information from the cost and from the revenue so that they can determine the profit, right?
Yes.
And the investment center will come and pick it up. If there's a profit or if there's a return, if there's a surplus, they will give it to the investment manager. Then you go and invest it. And this one, good. And this continue. Yes. I hope you get it.
Yeah.
And this continue. So that's how it moves. So that's the definition for 6 marks. You're done. Let me see. Transfer method. No, I'll talk about that one. I'll talk about this one. This was the question I'm talking about. This is the November 2017, question 12. November 2017. This was the question that came. This is a question that came. November 2017. It was for 15 marks.
That's right.
Yeah. That one, no calculation. No. All the 15 marks were theory. And come and see the danger and the wahala. The traditional method of measuring performance of subunits to achieve goal congruence include divisional profit, return on investment, residual income, and transfer pricing. These profit-based measures do not reveal all about the long-term survival of corporate institutions. Identify and explain 5 areas of relevance that should engage the attention of management to ensure both short-term and long-term profitability and survival. I like that. I think the examiner want to talk about the crisis, long-term survival.
So, sir,
Yeah.
in this question, are we going to pick like return on investment and talk about it? Talk about take ROCE, talk about it, take transfer pricing and talk about it separately, or
No, but this question won't talk about, say, identify and explain 5 areas of relevance that should be engaged the attention of management to ensure one, long-term what, both short and long-term profitability. So if you want to talk about the measures put in there, we have to coin it to the long-term profitability. Now, these measures over the review only for a short term, usually years up to a year. So if we can go ahead and bring some measures that can tell us long-term profitability to be very fine and very good. So these measures only review the short term. Good. So that's how we should approach it. So we should approach it from the measures that can give us long-term survival, not only the short term. Or we can pick each of them. Okay, so divisional profit 1, 2, 3, 4. We can pick each of them and then tell the examiner the areas that they should engage. Good. So that is it. The B part was the one that was the funniest one. The B part. Now, what does the B part says? Explain the importance of the following terms under the performance management information system: transaction processing system, enterprise resource planning system. So that is it. Now 13. Compare and contrast the use of residual income and return on investment in divisional performance. This is May 2018. May 2018 question. The bottle labeling division of Crash Drink Limited currently has a capital employed of this, earns annual profit after depreciation of this 18. The divisional manager is considering an investment of 10,000 in an asset, which will have 10-year life with no residual value and will earn constant annual profit after depreciation of 4,600. Cost of capital is 15. Required. Calculate the following and comment on the results. The return on divisional investment before and after. Divisional residual income before and after. You are done. 4 marks in that order. Okay, so this question to be done. Super Express, we solve it. Intra group, no. So your own with this. This one is not difficult. No. IT, not at all. But all you do is cost of capital is 12%. Capital employed is given. Project A, project B. Sales generated is there. Net profit margin is there. If this is the net profit margin, then the examiner will not give you what? The net profit. Oh. How we get it? If they have given you sales and they have given you net profit margin, then I'm not expecting them to give you the value of the net profit. So if you multiply this by what? By the sales figure to give you the net profit. And that's all, you are done. So that was the only issue in this question. Apart from the plenty stuff. Good. They say that the company is seeking to maximize shareholders wealth, assuming that Division A acquires more efficient asset of 15 million, and Division B sold one of its assets with a written value of 24 million. The profit is expected to increase or decrease by 11 and 5 for Division A and B. So that is it. So all of them, calculate the current return on investment and residual income for each of the division, and then calculate it after. So basically, that is it. And this was my last question for that sitting. Yeah, I think that was my last question for that sitting. And then they brought this one for five.
The transfer pricing, what does it mean?
Good. Transfer pricing talks about divisions. If one division want to transfer goods to the other division, maybe Division A and Division B. Let's assume that this division produced the car itself, and this division produced car lights. Good. If this one wants car lights, and this division want to sell the car light to this, they want to transfer. See, between related party, we don't say sales. We are selling to this because it's not like arm's length. So we say you transfer it. Either transfer it for me, transfer it. Good. So it's just a price at which the selling division, this guy, will be willing to receive for transferring the goods to the receiving department or receiving division. That's all. So it's a price. And we have the minimum and maximum. Yeah. The price, what this guy will charge, the one selling. The one selling want to charge a higher price, eh? Good. So the least one he will charge, the least, he will charge the minimum. And then the buying department will thought, okay, for me, the highest one I can pay, the maximum. So if the transfer price is a range. So these two managers will come and sit down and negotiate. So most of the exam question, when we were examining you, most of the exam question, we were just giving you only information that will help you to calculate just the maximum and then the minimum, so that you tell us that the examiners, sorry, the managers in question have to come and sit down and negotiate on the amount. So transfer pricing simple means the amount at which you are transferring the goods to the from related party divisions. Good. Divisions, and then you are done. Good. We will scan through the syllabus for the last to see. These are the last questions. Yes, I have some nice questions. I can't find them all. These questions are the ones that I provided for November 2018. These are the questions for November 2018. And behold, at least we got some of this one there. They got this question too. The residual income too, they had it there. I think their question is the one that I saw here. Yeah. Okay, so that is it. So let's see how best we can. Let me see if I can go through the past question to walk you through. In fact, they are the past questions that I selected. I selected to form these questions. All of these are coming from the past question. But I have another set of questions on performance management. They are recent. The recent one that I did. And they are very good. I thought it's the one that I'm doing here. Just that one is a bit complicated. As the years going ahead, it bring complicated issues. Where is the past question, Kra? Okay, here's it. Let's see if you can see some of them in it. Past question. Let me check the most recent. Let me check the most recent. If I'm going through all this. This was a question that we solved. So this is May 2018. This is the first question that we saw, right? Yeah, this is the question that we saw. Share. Look at the old ones. Let me go to most recent and we'll be fine. Most recent. Most recent. This is May 2018. Let me see what happened there. May 2018. That was the year that they brought the bottle label division, the crash. That was the year that they brought the crash. Let me check the last two settings. Basically, that is it. Basically. Good. So you go to, I still look for that question I'm looking for. I think I have some in the mock. Good, I have some in the mock. But not the mock. I hope you have the intervention. The intervention questions.
Yeah.
Last sitting's intervention question is still valid for this sitting. There's a question in it I'm looking for. Let me go to the page and see if I can get that question. There's a question I'm looking for in that intervention. When I get that question, I'll be fine. Good, I have the intervention here. Good, let me quickly upload it here. Good. So where are you? I'll upload it right now and then I'll go through the past, not the past question. I'll go to the syllabus, what you should know, the area of it.
Yes, the syllabus.
Yeah, the syllabus. So then we are almost through. Good. This one was the question. Please, this question, try and go through for me, and you'll be fine. They are strategic. I'm looking for some question. That question, it's a compilation on performance management. It's the most recent question that I put together. It's from ACCA and SIMA. They're very good. I thought that's the one I'm looking for, but I have some of them in the mock. So I'm going to the mock question, getting to the end. So, hey, this question to exist. Hotovi. Please try it and come and testify.
Okay.
Hotovi. Very interesting. In fact, all of them, all the topics that you need to, you need in order to pass this paper have been selected here. So all the topics I've done it. This is for short-term decision making techniques. What you should know. I've listed them there for you.
Okay.
And break-even formulas, and then the questions, examinable questions on them, highly ones, and then I put them there. Now this one's for last sitting. This is last sitting's own. For last sitting, break-even. Good. And then from there you go to where? Shutdown. This one is shutdown or make or buy. From there you go to investment appraiser. This one is make or buy. Long-term decision, investment appraiser, MPV, internal rate of return, account rate of return, payback, lease or buy. So these are the questions that fall under them. And MPVs are okay. Let's go to budgets, almighty. So from question 30 going is budget. These ones are carefully selected. These ones are selected questions. From budget, I went to variance. From budget, I went to variance in order before finally land on the performance management. This is the variance. Good, variance. Traffic co. I remember this question. Traffic co and then bed co.
Yes.
Yeah, bed co. All
Last Sunday.
Exactly. The question. And then save soap co. Yeah, save
All
soap
the
co.
cocoa.
Yes, all of them. Good. The questions are very interesting. And I brought this question again in it, which was a repeated question. And then reverse. And this question, remember this question? This one. That small question
Yes.
demand a lot of calculation, variances, a lot of them. And then this one, Ghana gas.
Yeah.
Good. And then organic bread. Organic bread, yes, it's also under. Then you go to performance management. Return on investment, capital employed, residual income, transfer pricing. And another one, good. This is the question I'm looking for. Sales revenue is there. Less variable cost, contribution, less controllable fixed cost, includes depreciation of divisional asset. Good. Controllable income 460 and 201. Less apportion central cost. Have you seen how they break it down?
Yes.
So that when you are calculating your return, you know which one you're going to pick. Controllable profit, non-controllable profit, in that order. You know that this question is a bit like intense.
So say,
yeah,
depreciation should not be part of it because it's the headquarters that pays the depreciation. No,
the depreciation of that center, that one must be part, but the overheads from the central
should not be part.
Yes, should not be part. So that is it. And then cost of capital is here. So calculate the annualized return on investment. Why annualized? This one is per month. Yes, this one is operating statement for month of October, right?
Yes.
So this one is just for 1 month too. I like this.
Multiply it by 12.
Exactly. So they say calculate the annualized return on what investment. The answer will still be the same. Okay, this one will differ. But please, the total net assets, we don't need to multiply it by 12. Why? Because that one, we don't have month net assets. No. Financial position, you cannot divide those items. So this one is cumulative already. So it's just the profit that you have to multiply by 12. You are done.
Okay.
And discuss the relative performance. We've done that one. Calculate the annualized residual income. Why annualize? Everything
multiply
annualized.
By 12.
Exactly. So, and briefly discuss the strengths and weakness of return on investment, and then discuss the other. I like this question. Division F, Division N. Aviation sales, controllable profit, less apportioned head office cost, net profit, concurrent asset. All these ones are there. Then they will give you information. So basically, that's how it is. And then B, budgeted operating statement monthly shown below. Require calculate expected annualized divisional performance, and I asked a lot of questions here. But the questions were more than what I was. Na and Hewo was repeated in the mock. And then this one too, from here going, I think this question, you've seen them before. Thatcher. Have you seen Thatcher before? Yeah. Good. Have you seen this question?
Yeah.
Yes, this was what last it in the massage it, and then brought it. Lastly, they asked for performance, assess the performance of the company. So I asked them to assess the performance of this company or division. It can be a division or company. Then you are done. Just here, I include
The no financial.
thank you, so that when you are writing a report, you tell me the non-financial aspect, of it, and then you are done. Number of visitors, I included it there. And then wash co. It's so nice. Wash code. That one's on transfer price. That's the last aspect. Okay, so that's the end of today's edition. Let me quickly walk you through the syllabus,
Yeah.
and then we
when we are doing our revision, we should deepen our knowledge.
yes. So let me see if I can get it from, instead of writing, I'll just get it from the syllabus itself and then project it quickly. The syllabus itself, so I can project it quickly. She'll have it. She'll have it on this new machine.
Hello, sir.
Yeah, I'm here.
Are you waiting for? Are some people also waiting for you?
Yes, please. Right after this, we have another section.
Hey.
Yeah.
Sorry for you.
When the time is getting nearer like this.
Yeah.
And then we also have another one again after this, around 1 a.m. there, because this one will last for up to, let's say, 12. More than 12.
Hey.
This one will go more than 12, beyond 12, and then that's all that. Okay, it's not easy. Okay, good. I have the syllabus here. So let me start projecting the new syllabus. What we should know. How about the syllabus, the new one? It's very good that you learn by the syllabus. Please, the manuals are not the syllabus. I'm begging you. What is in the syllabus? That's what I'm going to examine you. The manuals are study guide. So it can happen that you go, some of the questions go outside the manual, but it will be in the syllabus. So management accounting is the application level, page 22. Let's go, page 22. Good. So I will start by saying this is the scope. Budget performance. Cost accounting technique. Is this one fast? No, I don't think this one's fast. No, this is not. This is level 1 own. This is level 1 management accounting. Let's go to the level 2 management accounting. Is it 2.2? So 2.2 should come before 2.3 or 2.4. It's 2.2. Audit and assurance. Yes, we still have transfer pricing. Trouble. Still have our transfer pricing, yeah. Then this time around, transfer pricing is likely, so you have to go for rematch for transfer pricing. So that we don't normally, our transfer pricings are, in fact, all of them are in the performance management. They are in the one that I bought. Okay, so this is the management accounting. Now, you have the contemporary approach to management account that talks about have a lot of theory there for 15 marks. This one I call it margin of safety. So you have 35 margin of safety. That one, let's go and see the breakdown. Ethical issues in management accounting. That's the last thing I learned today. Brought ethics, both in financial reporting and management accounting. So ethical threat to behavior, ethics. It's the same ethics that is in audit and assurance, which is in financial reporting now, which is in the advance. So the same ethics, but here to management accounting. So there was one question. It's an advanced audit, I think 2018 May. It deals with inventory, and then is it finance manager and then the management accounting. One of them, they have some issues with their inventory valuation. All of them have a different view. It's on ethics. So we get that question to be fine. And then the models for evaluation. Throughput, environmental accounting. So here the big ones are the throughput and then activity base. So kindly watch out for throughput and activity base. Because last sitting, they brought a question on ethical. So none of this one came. None of the models were there. But so this sitting, I'm saying that there must be models, or I suspect that there must be models, which include a balance scorecard, which include the, in fact, last thing there was balance scorecard. Yeah, last thing there was balance scorecard. And then throughput, and then the activity base, the rest are reading. Cost control, region, continuous, all these ones are like reading, benchmarking of them. And then you are done with the A part. It's for 15 marks, so I call it margin of safety. Why is it a margin of safety? This one, any of this one, stand chance of come. You don't know which one specifically, or unless the one I'm saying, the throughput and then activity base. Good. Then the B part talks about budget and budgetary control. Now, I'll jump down and talk about it. I'll go to short-term decision-making techniques, another margin of safety. This one have a lot of item under it, and then under it, they will examine you, few of them or combination of any of them should give you 20. These two topics, they are the one that they swing. They have a lot of them that you don't know which one is coming. They add up to 35. So it means that 65 marks are specific, 35 are unspecific. So those one are learning, you take your time and then go through. So I'll go through that one so that I'll have enough time for. So short term, that's the D. So let's go to D. That's how I arrange my own. Short-term decision making. So one, calculation of what break-even point, contribution, margin of safety, single or multi-product. So what we did, good. Separation of costs using high and low, which came last sitting. And I will show you the last sitting's question. It's in the one of the drops that I've been bringing out. It was in it. For that question is ACCA past question. I won't lie to you, it's ACCA question. So I'll just show it to you. Allocation of scarce resources to products with the highest contribution per limiting factor. That's the limiting factor. This is limiting factor analysis, and it's the opposite to throughput. Here we are going to use contribution. Here contribution is the factor, and the throughput is the factor. And then sustainability. No, stability of techniques. Now this one talks about just the outsourcing, make or buy, and special contracts. And here I even added shutdown. So there's a good news. Formally, this topic was a very topical. And I even tell students that any student that tackle this question first, the short-term decision-making techniques first, and you get stuck, you fail the paper in advance. Yes, if you tackle that question. So I always ask them that they should look for that question and tackle it last. But if I don't forget that it come around question 3 or so, from question 3, by the time you pass question 3, you've come across that question. Formality contains probability, uncertainty, risks, pricing. Formally, this topic contains pricing. All of them were loaded there, which came in November 2018. Pricing came. That was the last time it came. But here it's not here. But now hear me. In the manual that you are using, there's a pricing in it. I don't know where they got it from. Because in the syllabus here, I can't see pricing here. Special discounted pricing, special contract, or others. Good. So these two ones don't, like, you specialize on 1 or 2, you are done, because there are many. You don't know which one is coming. Now the rest, all of them are there. Conk. Budget, you go and meet it there. Conk, 15. Management decision technique. This one is the long term. This one, the C is the long term. The investment appraiser, 15 marks, it will be there. The MPV. And then E, which one? Long term decision making. This one is the investment appraiser. One of them is variance. I think this one is the variance also. The long-term decision-making techniques is the investment appraiser. And the management decision-making technique, this one is the variance analysis. There's an issue here. The management decision-making techniques, this one rather they are referring to an investment appraiser because investment appraiser now is 15, not the 20. Okay, this one is 15. Okay. And the performance evaluation, what we did today is 20 mark.
20. Wow.
So that tells you the killer is the killer bee. 20. So that's where you have to focus your attention. So attention must be on the performance management 20. Long-term investment appraiser, another 15, making 35. And then the variance, this is the variance, 15. Good, making 50. And budget 15. The rest are margin of safety. Then you are done. Most of the topics are not here, but some of them are in the manual. So take note when you're reading them. That may not confuse you. Or you can extend your knowledge. So residual income, evaluating transfer pricing. Okay, so the transfer pricing is what left us performance report. That's the ratios. Divisional and other within division and other within organization. So basically, that's the syllabus. Knowing your syllabus is very important. What is expected of you? That you won't go and see surprises. Okay, so this is how far the good Lord will bring us. Now note, we are ending successfully. I'll still stand by for any comments, any questions solving. I'll try and see if I can forward a transfer pricing to you, if possible. Or we will reschedule for transfer pricing, if possible. Declare the transfer pricing there. Because it has been a long time that transfer pricing dropped. Since November 2018, where they brought the theory question and it has not come again. And it's in our new syllabus, so it means that we have to pay attention to it. There's a last thing. In fact, the question that I brought out, only one question was transfer pricing. My last set of questions, only one. Out of the 50 questions, only one. Okay, so that is it. Good.
Okay.